Last time we spoke to our next guest, he was optimistic on mining, but was still looking for a bottom. So is the bottom here? Joining us now is the editor and publisher of the Daily Gold newsletter, Jordan Roy-Byrne. Thank you so much for being with us.
Thanks for having me.
So commodities have really taken a hit, Jordan, led by weakness in oil and lower demand out of China, the world's second largest economy. Mining stocks are no different, really struggling amid weaker metal prices here. Is it time for a turnaround in mining stocks? It seems like I've asked that question so many times.
Yeah, well, I think given the severity of the bear market in terms of both price and duration, it's definitely time for a turnaround. But unfortunately, I don't think it's here yet. I believe a turnaround and a good turnaround is inevitable, but I can't say it's imminent. I still see a little bit more downside left in this bear market. I think it could last maybe another couple months to as much as 6 months. I would be really shocked if it lasts much longer than the first quarter of next year. So
Right.
we're not quite there yet, but obviously very close.
So let me ask you, what would need to happen to see the mining sector bottom out here?
Well, let's look at fundamentals, which are, I mean, the key driving force is really for precious metals, we're talking about negative real rates. And that also impacts the entire commodity sector to a lesser degree. So fundamentally, what we need to see happen is either an increase in inflation or a decrease in bond yields. And obviously, the action in the market, the price action, the market will discount the future and will start to anticipate either of those things happening before it appears to be, happening immediately at the moment. So, I mean, I know we're going to talk a little bit about technicals
Right.
later. Fundamentally, that's what needs to happen.
Well, I'm going to ask you about the current gold price now. Is it a buy, or are you expecting more volatility as markets digest the latest Fed meeting?
I am expecting more volatility and beyond the Fed. And I think if you look at the VIX, I mean, recently that spiked to hit a 3.5-year high. And there's something called the Gold Volatility Index, GVZ. That also spiked in August and hit, I believe, a 7-month high then. And gold volatility early in the summer was really low, very close to multi-year lows. And I think that definitely as we move into October, I think in all markets you can see an increase in volatility. I mean, that's very possible and something to look for.
Now, what about silver? I know you were more optimistic about the metal over gold last time we spoke. Where do you see the metal headed?
Well, unfortunately, I see silver headed lower. The price action, I mean, Danielle, I know you talked to many technical analysts, and I'm sure you can't find one who would say it's looking bullish as far as the technicals. I mean, fundamentally, industrial demand is weak. I mean, we talked about real interest rates for gold. I mean, that's not supportive right at this moment. I mean, if you're looking out over the next several years, I think silver, it's quite possible, even probable that it's going to be trading much, much higher. But looking at where it is right now over the next few months, I think it has a date with $12 or $13.
All right, and there are a few who still love silver, but before I let you go, Jordan, you were telling me offline that the relationship between gold and equities is really important right now. What needs to happen for gold to push up to higher levels?
Well, what needs to happen? I think you need to see more downside in the global equity markets. You need to see them make another leg lower. And if you look at the correlation between equities and gold, I mean, historically, it's all over the place. It's always changing. But what we've had in the last 4 years is it's a strong negative correlation, of course, in favor of global equities. But if you look back in history, this has happened before, mainly in the 1970s. It persisted from about 1973 to 1978. And also you saw the same thing from 1996 through 2002. And of course, going back then, there's a lot of similarities between what we see now and then, whereas gold and commodities were in a really bad bear market. The stock market was doing very well. And then, of course, we saw the bear market in equities. And from 2000 to 2002, gold and mining equities did really, really well. And I think that's something we could see a replay of in the next several years, but we haven't quite seen that turn yet. And so I would advise listeners and watchers to keep an eye on the gold against stocks ratio. It made a lot of progress in August, but it's not quite there yet. So that's something I'll be watching in the next couple months. If we see gold break out and we see that ratio move to the upside as the stock market has more problems, I think that would be very, very bullish for precious metals and tell us that we're likely to begin a new bull market.
Thank you, Jordan. Thanks for your thoughts today.
Thanks for having me.
And thanks for watching this edition of the Mining Report. We'll see you tomorrow. Thanks for watching.